Welcome back, investors. Jake here. In this video, I'm going to be taking a long call position in one of my favorite stocks, one of my favorite companies, and that would be Adobe. And when we check in with the markets, currently all of the indexes are red. The S&P is down about 0.93%, and this should be expected given the tremendous run-up we've had for the markets for the S&P the last week and a half. The S&P is basically up from its local low about 8%. So I'm actually expecting in the near term, the rest of this week or even next week, for the S&P to pull back maybe to this 4,400 level, maybe even as low as 4,300, but there's no reason to panic. As long as we're creating new higher lows for the market and new higher highs, then it looks like we've created a reversal on news of the first interest rate hike by the Fed. So I am looking to deploy my cash and take some positions in good companies. My video yesterday, I talked about buying the dip on Netflix, and today I want to buy the dip on Adobe. Now, Adobe gave their earnings report yesterday. We're going to talk about that. And on news, the stock has sold off an additional 10% today. So you might be thinking it's bad news. I don't really worry about it too much, and we'll talk about why. Adobe's share price peaked last November with a share price of $688, and from its 52-week high, it's currently down almost 40%. So the NASDAQ was in a bear market. Tech stocks had sold off greater than 20%. So Adobe had experienced a sell-off of double that. And I still think this company, once again, has tremendous revenue growth, insane profitability. It's a premium brand with a moat, with universal respect, I think. I think everybody has a favorable opinion of Adobe. Other stats I can toss at you is their Creative Cloud suite makes up 83% of digital media segment revenues. It's one of the most recognized and in-demand software in the market. Its PDF reader dominates the market, leveraging its first mover advantage to capture 41% of global installed devices. So everybody in the world is doing business and knows about Adobe, even if they're choosing some of their competitors. The company also is doing aggressive repurchasing of its own stock now that it's down 40%. This gives price support. Once again, Adobe has fantastic profits, and they're returning them to their shareholders currently by repurchasing stock. So Adobe yesterday gave their earnings reports, and they beat on revenue year over year, only a 9% increase. We're going to talk about that, but their revenue beat by 20 million with 4.26. They beat on their earnings per share by 3 cents. So why? Why the 10% sell-off today after they gave their earnings? And it's because their quarter two outlook was reduced. So Adobe, the company itself, is projecting revenue for this next quarter to be 4.34 billion. That's still greater than what they're currently doing of 4.26. So they're still projecting revenue growth. But the consensus from Wall Street was that should have been 4.4. What is a possible explanation for this? And Adobe stated on their conference call that they cut all their sales in Belarus and Russia as long as Russia is continuing their hostilities in Ukraine. No government mandated that Adobe should do this. It's not a sanction. Adobe unilaterally decided to cut all services and sales in Russia and Belarus until the hostilities end. So potentially, if you don't think this war in Ukraine is going to last longer than 3 months or a quarter, then you don't really need to worry about this reduced outlook that Adobe gave. I'm sure that, if there's a swift end, one way or another to Vladimir Putin and we can end hostilities in Ukraine, then these Fortune 500 companies would start doing business immediately in Russia again. perhaps government sanctions might take longer to lift until there's some kind of peace negotiation and reparations to Ukraine are decided. But these companies, as soon as the fighting stops, guys, I think they will immediately start allowing their customers in Belarus and Russia to continue their services. Okay, let me go on macro trends with you, and I want to show you their insane revenue growth over the last 12 years. This is a phenomenal company. So year over year, quarterly growth consistently in the 20%, just like clockwork, guys. It did dip a little bit in 2020. Potentially, you could argue, once again, with the shutdowns, maybe companies were cutting back on employees initially because everybody thought this pandemic was going to be debilitating to the economy. We then saw this huge jump in the first quarter report for the fourth quarter of 2020. And this is why this earnings report of a revenue growth of only 9% looks so bad. And you can see it here. So the Adobe reported 3.42 billion in quarterly revenue. That was November 30th of 2020. So they're reporting for the third quarter of 2020. It then jumped up huge in the fourth quarter of 2020 when they reported February 28th. So this year's fourth quarter earnings reports that they gave is comparable to the fourth quarter of last year. What I'm saying is that there was a huge jump from 342 to 39. And Adobe's revenue actually declined the next quarter. It went from 39 to 383. Once again, probably because, I don't know, maybe some subscriptions were canceled and then they got them back. I can't actually explain why it dipped between the fourth quarter and the first quarter. But the point is that in 3 months, when Adobe reports, they're now comparing against this quarter, the 383. And as we stated in this article, the street was expecting 4.4, but Adobe is saying 4.34. If we get good news out of Russia and Ukraine, potentially they could really beat on expectations. But even if they don't, even if his hostilities in Russia and Belarus continue to disrupt their business, I don't think it's a big deal. When we check out net income, no shocker, it is a very profitable company. This red bar down here, once again, comparing itself to this crazy quarter they had a year ago. Shares outstanding, this is what I love to see. Adobe aggressively buys back their own stock to reward their shareholders. So you can see their shares outstanding peaked back in 2013 at 514 million, and they've got that down to 481 million. The final thing that is worth mentioning about software stocks, cloud stocks like Adobe, is that their margins are insane. So when we look at their, let's see here, gross margin, you can see that that's not what we want. We want operating margin. All right, their operating margin is 36%, meaning that every $1 in revenue that the company brings in, they make 36 cents in pure profits. Pure profit that they can then return to their shareholders, or maybe do R&D or advertising or whatever operating expenses they want. Pretty insane. All right, let's check out the price ratios to once again determine, are we getting a good deal at this current price? And it actually looks like Macro Trends has not updated yet. It takes like a day or two for all these little bar graphs to update on their website. So just basically take a 10% discount from all these ratios, as Adobe is down 10% after earnings. So their P/E says here is 45, but it's probably now closer to 41. And 41 is lower than it's been, once again, going back a very long time, probably all the way back to 2013. When we look at their price to sales ratio, it's currently 13, which is very high, guys. I talk about you don't really want price to sales ratios in the double digits, but once again, this is a premium brand with really good revenue growth, very high profit margins. So investors will pay this premium. Currently, it's 13, but once again, we could probably lob off about 10%, so it's probably closer to 12 now. And yeah, I mean, that's still a pretty decent deal, in my opinion. All right, let's get to the technicals, which is the primary reason why I want to take this position. It's obvious that Adobe's share price is rich, with a very high price to earnings, price to sales ratio. But I think their technicals, where they currently are, give it a lot of support, especially with share buybacks happening. I think Adobe is giving this stock a very strong level of support. So long term, really long term, guys, there's this uptrend slope that has been intact going all the way back to November of 2016 with 1, 2, 3, 4, 5, 6, 7 points of contact. And where is the share price currently? It's just above that slope. That slope is giving it support. Additionally, there is a line of support, and we can just draw this in here, that goes all the way back to June of 2020, so almost 20 years, and it looks like it's at 420. I know I'm going to get some comments about that. So let's make this green, let's add 4 candles, and we can say that here at 420, Adobe is experiencing price supports going back years. I mean, the share price currently at 417, it's where it was in June of 2020. Do I think Adobe in the short term, near term, is going to get back to $700 a share? Definitely not. So where is the logical line of resistance that Adobe's share price is probably going to struggle at? And it's right here at $500. I think Adobe is going to struggle to get past this, potentially for the rest of the year. Once again, just with the very high, rich valuations. If we get a green candle above 500, that's actually a very bullish sign, and I think Adobe could, break out and go to 600. But what am I doing today? What is my goal in the short term? And I'm buying right here at the bottom of this range, guys, at 420. And I just want Adobe over the next 3, 4, 5, 6 months to get back to 500. I think this slope is going to give it support. I think tech stocks are going to run this summer, then probably crash this fall. So my goal is to open a call contract down here and then hold it until Adobe can get back to $500 a share. Last thing I have to mention about the technicals is I am breaking one of my own rules by taking this position now. On my channel, I always preach, guys, if something is falling, don't buy it, let it keep falling. And Adobe, once again, peaked last November, and it's been bouncing off its 20-day moving average, trending down almost 5 months now. And the share price is currently below all 4 of its major moving averages. So there's going to be a lot of selling pressure on this stock for it to recover, to get back above its 50-day moving average, 100-day moving average, and 200-day moving average. So there is a lot of technical levels that are going to give Adobe trouble, but I'm not trying to get back to 582 or 550. I'm just trying to get here. I'm just trying to get back to 500 because I think Adobe will probably sell off once it hits this 500 level. But that's okay. I'm basically saying, hey guys, I can call it right here at the bottom. I'm that good. We'll see. We'll see. I think, once again, the Fed last week doing their first interest rate, this was a seminal moment in the market, and there's been this broader shift that I think Adobe should benefit from, similar to these other stocks like Tesla and Nvidia. The more the more hyped, well-known, and growth-orientated the stock is, the better it seems to be doing. So I think Adobe will benefit in the short term, and I just want to snipe this and get out before 500. Okay, when we check in with my Schwab account year to date, I'm only down about 5.8%. Makes me happy given how much in the hole I was. Let's now go into my Schwab account and open this position. Here's the option chain, and for expiration date, I always like going very far out in the future, once again to give my contracts plenty of time should there be a shorter term sell-off in the market or sell-off in Adobe. So let's go with January 20th of 2023. This is in 304 days. And I want to go with a strike of a nice round number, and I'm looking to spend about $5,000 or $6,000. So I'm digging these prices, guys. For a strike of 420, which is just out of the money from Adobe being at 418, I'm seeing a price. The buyers are bidding 5,570. Sellers are asking, or the buyers are bidding. Sellers are asking 5,815. I'm just going to go straight at 420 and click buy to open. So once again, reviewing all the details for this call contract, expires January 20th of 2023, a strike of 420, and I am buying to open. I'm going to review order and execute. It's now in my account, and you can see my cost basis was $5,645. This is about a 6.73 position of my account. If you didn't see my video yesterday, I did sell out of my long calls in Berkshire Hathaway. They were up huge, guys, and I just had to lock in profit. That freed up some cash, so I still am sitting on about $18,000, and I'm looking to deploy this. Once again, I think there might be a new higher low created in the market, and there might be a slight pullback later this week or next week. I am looking to open some new positions. I'm interested in Amazon. I'm interested in Microsoft. There's a couple others that I'm looking at, and I will make those videos for you when the time comes. Okay, guys, if you enjoyed this video, give me a thumbs up so the algorithm knows it's good. If you have any comments or questions, let me know down below. I love hearing from you guys. Till the next video, be safe, take care.